afternoon from Los Angeles. It's Alyssa Corum and Justin Nielsen here with a look at the stock market today. And on today's show, we're going to be taking a look at Zoom as well as Roku and Wingstop. So some interesting action, even though the major indexes are a little disappointing.
Right. Yeah, that's the big thing that you have to watch out for in this market right now. So where did we close?
That's right. Well, we closed down about 1% for the NASDAQ. The S&P 500 finished down 0.6%, and the Dow closed down about 0.4%. So still, this 50-day line is in question here, which is what we've been really keeping an eye on.
Yeah, and for as negative as I've been this whole week, especially because of Monday's action. I was talking about the vertical violation in that video, and how that usually portends for more weakness to come, or at least something that you don't want to be involved in for about 3 months. The prior 3 days, looked pretty good. It looked like a strong rebound. Yesterday, back above the 50-day line. However, as you and Ken mentioned, it did close well off its highs. And so while the volume was heavier than the prior day, we've seen a lot of low volume rallying here. And that kind of just suggests that there's not as much buying power. And then with today's action, it just kind of shows you, okay, this market might need a little bit more time right now in order to recover from Monday's action.
Right, still looking for direction here.
Yeah.
So the 50-day line, we'll have to keep watching that. And then, as you were mentioning, if we can somehow continue to climb higher, follow-through day is what we would be looking for to confirm the uptrend.
Right, because now we have had a bottom. We've gone below. Well, we don't know it's a bottom yet. A potential bottom,
potential bottom.
But now it's day 4, and we are always looking for the follow-through day to happen on day 4 or later. So follow-through day could happen at any point. But here again, there's a caution that a lot of times with this vertical violation, sometimes the first follow-through day or 2 might fail. They don't all work. But,
that's what we were seeing last year in November.
Yes, exactly. In November, and also even prior to that, February, you had another vertical violation, and it made new highs, but then it kind of sunk back in. The NASDAQ did.
Right.
The S&P 500 wasn't able to make new highs for quite a while. There was a lot of sideways action in 2018.
That's right.
If you go look at it like on a weekly chart.
So we'll have to keep an eye on that, but we do want to look at a few individual names, starting with Zoom. IPOs have been all the buzz this year, and Zoom is looking really good. It's zooming higher,
yes, exactly.
I can say.
Yeah, and people might wonder why we're focusing on IPOs right now, especially because the market's maybe not in the best situation.
Right.
But these IPOs have such great profit potential. You always want to have these on your list, on your radar. And Zoom has been a very strong one. This is Zoom video, just so people know, this is ZM is the ticker symbol. Some people got confused and we're in this penny stock, Zoom, Z-O-O-M.
Oh no.
And that is something completely different.
Something different.
You don't want that one. But ZM has been looking very strong. It had an IPO base. IPO bases can be a little bit shorter, and that's okay.
Exactly.
You were talking about this in your article on the podcast that Mike Webster did. He's our expert on IPO bases. He's done a lot of computer algorithms that kind of search them out. So this broke out yesterday out of that IPO base, and it followed up on its gains today. It was up very strong. I'm not sure where it closed, but last I looked, it was up like 7.5%.
Yeah, it looks like it closed really close to the intraday high here, almost 8% up for the day.
I mean, it's phenomenal. And understand that with these IPOs, you sometimes will have extra volatility. So they're not for everyone. And you certainly don't want to have a whole portfolio full of IPOs if you want to sleep at night. But they're definitely worth watching, and they're so important that we have a cover story on our A1 page today that will be coming out. Brian Deegan wrote that on IPOs.
And the New America.
And the New America
is on Zoom.
We talked about Zoom.
And also my stocks to watch column, which a few little tidbits also make it into the paper, is all about IPO stocks that are in your buy range. So to contrast, Zoom here, TradeWeb TW, that speaks to the volatility that you can see with some of these IPOs, because it tried to break out, hit some resistance, some reversals, upside and downside, kind of back to back. So they are a little tricky to handle sometimes.
And sometimes you don't quite have the profitability yet. Now Zoom has just gotten profitable, but it doesn't have a long profitability record. And so you have to look at that. And sometimes if we don't show the profitability quite yet. We will look at the revenue, and if we have very strong revenue, that can kind of keep us interested in a stock.
Key signal there for IPOs. And let's move on to Roku, which is holding tight after breaking out of a base on its relatively recent quarterly earnings report, which showed strong revenue growth. The earnings weren't really there, but investors really liked the look of this report, and I think holding tight here is especially notable given the downdraft that we saw and are seeing.
Yeah, the fact that investors, kind of looked at the report and had a lot to cheer about. I mean, they put that stock up 28% in a single day. And the fact that Roku has been able to hold on to those gains is very telling. When you have a stock that shows that kind of tightness, the unwillingness to give up the gains, that's something that we really like to see. And this is a pattern that you and I have been talking a lot about on the videos with CMG, Mercado Libre, that's another one. There's a lot of these stocks that have had the strong moves and then they go tight, and that can be a setup for a future move. So that's why we keep it on our radar.
Okay, so what would we be looking for then? A 3 weeks tight, or maybe if you're swing trading, what would you look for here?
Well, right now Roku looks like it's kind of setting up resistance right there at
it's around 80.
So just
well, actually, sorry, I moved on to Wingstop.
Okay, I was like, hey, that's not what I was remembering. So it's just above 80, and so if it can cross into new high territory there, this wasn't a very big break. This was only about a week or two, but that might be enough. That might be enough. Again, it already has the strong move behind it. Now, if it just tightens up, ideally, if it can put 5 weeks in for a flat base, now you've got a whole new base that you can work off of. Again,
very true.
Assuming that the market is in your favor.
Exactly. Always that caveat there right now. And let's move on to Wingstop quickly. It's also trading tight and resistance here at the 80 level.
80,
I got a little bit ahead of us. So what do you like about Wingstop's chart?
Well, this had a 3 weeks tight pattern. So just so people know, we're going to shift to a weekly chart in this case. We were showing daily before, but this is a weekly chart, and you can see that the pattern recognition algorithm on MarketSmith does a little blue area that identifies these 3 weeks tight areas, and that can be very good for a stock when it kind of takes that pause. It's had some move up, and now it's consolidating those gains. And even though this 3 weeks tight, it didn't really break out above that. It kind of you might look at it, pull back a little bit. It did remain above its 10-week moving average. Now, we talk a lot about the 50-day moving average. Of course, on the weekly chart, that corresponds to the 10-week moving average.
Right.
And so the 10-week moving average has contained this move.
So the 3 weeks tight still in play then?
The 3 weeks tight is still in play. It's not, maybe this is turning into a flat base. Again, because now you have, even though it did creep into new high ground, it still has maintained that kind of tight action. So that's the thing that I'm really looking at here. And as you mentioned, that resistance right there at 80.
So that's positive action to see, again, where we are seeing a lot of stocks this week that fell through key support levels.
Right, yeah, so whenever the market is kind of making a lot of stocks fail, the breakouts fail, we're always looking at the ones that are holding up, the ones that are showing strength, and Wing is a good example of that. One caveat though, it did come out of a third stage base, so that's starting to get a little bit later. So that's starting to get to be a little bit later stage base, so that's another cautionary.
All right, thank you, Justin, and thank you all for watching. But before we go, we want to let you know that you should check out our latest episode of the Investing with IBD podcast, which just dropped yesterday. So make sure you head to investors.com/podcast for all of the details on that. And we have a webinar coming up for you next Thursday, all about how to navigate earnings season, which is a topic that you're very familiar with, Justin.
Yeah, so this is something we were talking about a little bit on the podcast earlier. Chris and I did that. Arusha had a podcast on it as well. It's very important. And even though earnings season is kind of wrapping up now, there's still some of these moves like with Roku, the things that tighten up afterwards, that might give you other opportunities. So there's still plenty to talk about. That's
right. So make sure you head to investors.com/webinar for all of the details on that. And in the meantime, make sure you're heading to investors.com on desktop or the IBD app for all the latest stock market news and analysis. You can also check out our content across social media on Facebook, Instagram, YouTube, and Twitter to stay up to date on all the latest. Thanks again for watching. Have a great weekend, and we'll see you right back here Monday.